Welcome back. It's time to take a look at the markets, and fresh concerns about North Korea seem to be weighing internationally. Pyongyang has suggested that its leader Kim Jong-un might pull out of next month's summit with President Donald Trump if the United States insists on the denuclearization of North Korea. In a statement attributed to a top North Korean diplomat, the country says it doesn't want to deal away its nuclear weapons for economic compensation. So let's start in Asia, and I can tell you that the Nikkei in Japan fell by nearly 0.5%. The Hang Seng fell slightly, and on the Chinese mainland, the Shanghai Composite Index fell by 0.7%. Now on Wall Street yesterday, the Dow Jones halted an 8-session winning streak and came down all markets there. The Dow Jones, the S&P and the Nasdaq Composite Index fell by between 0.7% and 0.8%. It had been a good May for markets before yesterday's sell-off, which has been blamed on the fact that 10-year bonds in the United States have risen. Yields on those bonds above 3%. The higher interest rates make bonds attractive and the stock market slightly less attractive to investors. Investors have also been fretting about looming trade talks between the United States and China. All right, European markets have been looking for direction. The FTSE and the DAX in Germany up slightly earlier. The JSE is faring better. The all-share index up by 1%. The most heavily weighted stock, Naspers, has added nearly 5%. So that's really helping the market today. Emerging market currencies were being weighed, meanwhile, by a stronger dollar. But the rand also now a bit stronger at around 12.50 to the dollar. Let's take a look at your main financial indicators. Then we'll take you to the JSE. All right, let's take you live to the JSE now. We're joined by Makwe Masilela from Makwe Fund Managers. And Makwe, let's start with retail sales. They're up by 4.8% for March. That sounds pretty good.
Very good. You know, the market was expecting anything around 4.4, and given that February it was 4.9, I think what we need to realize that this is a very important number or in very important sector, in the sense that, you know, our economy, more than 60% thereof depends on consumer spending, and retail sales gives a very good indication. Just like last year, you know, if you check the retail numbers, I mean, it was a question of people who were spending 31,900 per second. So it tells you that that's a very important sector and is a very clear indication of consumer demand.
Could this help the rand today? We saw it earlier weighed by a stronger dollar, now not looking too bad.
Not too bad, but unfortunately, what's happening with the dollar, it will continue to overweigh, you know, what's happening locally. So the dollar will continue to drive what's happening to the rand. And I think, as we all know, that the rand, I mean, the dollar itself is mainly driven what is happening with the treasury yields. We have seen they managed to reach the 3%, though today they were slightly down, but still over 3%. And it's just a simple thing that, you know, if you think in a risk-free asset, you can earn anything over 3%, why should you put your money in something which is risky like stocks, you know, where you don't even earn that 3%. So that is why you'll see people moving their money from stocks into bonds, and also with this whole geopolitical tension that we see between the North and the South Korea, because the guys just managed to pull out of the talks which were supposed to happen today.
And also China, trade talks there between the US and China, so a lot of different global issues pushing the dollar up and affecting us potentially this week.
Those talks will continue to be on our radar screen, and I think maybe up until the 12th of June, reason being that's when we expect the US to be having their talks with North Korea. And I think the US themselves, they'll like to have China on their side, you know, up until they have those talks with North Korea on the 12th of June. So it's going to continue to be on our radar screen, the talks. As we know, the guys are still far apart, but they just have to pretend to be decent to each other.
Makwe, go back to the 3%, and maybe you can really put this in context for us. The idea was that people would even move out of stock markets and go to bonds, and certainly move out of countries like South Africa.
Yes, I mean, you earn 3% when you buy a US 10-year treasury yield, so you don't even get that dividend yield or the payout when you buy anything on the S&P. Hence, the minute you see it reaches 3%, you see people dumping stocks because they see it as a risk asset, compared to them just in that 3%. But also what's more important is what is also happening with the 2-year yield, because those ones are more realistic in my sense, because you don't expect anyone to be holding any stock for the next coming 10 years doing nothing. But for 2 years, yes, it's important. But we've seen that even the 2-year yields, they've been going up, at the highest that we've last seen in almost the year 2008. So that itself is inflationary, because now that being inflationary in itself, it tells you that the US will continue to increase interest rates, probably more than what we're thinking, maybe 4 times or so. And if they do that, that becomes very positive for the dollar. Hence, we'll see the dollar continue to strengthen at the back of that.
Treasury has issued new bonds in South Africa, saying that there is a market for them. Don't we offer great rates still, even in relation to that 3%?
We do, but now what you have to bear in mind that you still have what we call exchange rate risk when you compare us to the US. And unfortunately, South Africa is seen as a risky asset. So hence, when you see stuff like that, you cannot even compare our bonds with the US treasury yields, because they're classified as one of the safe assets. And unfortunately, given our situation, given that we're classified as a developing economy, let alone our possible political uncertainty that people used to see, we are just classified as what we call risky assets. And hence, when you see there's some tension, stuff like that, then unfortunately people will run away, or the appetite for risky assets will dry up, and South Africa falls into those class of assets which are termed risky asset. Yes, what we offer around 8% is much, much better, but you see that working for us when things start to stabilize, and we've got what we call the interest rate differential, then you see people starting to put money into markets like South Africa and other emerging markets, because you offer higher yields. But the minute people sense some instability, then unfortunately they move away, they go to what they call safe havens. The likes of the US Treasury qualifies as that.
All right, thanks. A great explanation of the all-powerful bond market. Finally, our market is bucking the trend. We're up. Is that all about Naspers? And maybe you can also touch on Mondi results.
Yeah, I mean, Naspers at the back of what we've seen with Tencent, their first quarter, their results, the guys managed their profits going up by almost 61%. And thanks to what they call their smartphone gaming revenue, is continuing to shoot out the lights. And Naspers owning almost 30%. It continues to make money out of that, to the extent that people have been saying, why don't you just delist, or separate the two? You are South African assets and you are overseas assets. So Naspers to be at almost 6% high, it's mainly because of the good results that we've seen coming out of Tencent itself. And Mondi, the guys managed to make almost 15% operating profit. And thanks to what we call their average high prices, the selling prices, those prices managed to counteract the input costs, which were high. And input costs, mainly the likes of wood, energy, and chemical, they were a bit high. And also they had the rent itself, the strength of the rent had a negative impact on the results. But fortunately, the average selling prices were much higher and managed to help Mondi to be able to give the kind of set of the results that we've seen. And at a P of 16 compared to SABC, the market were happy, and I think the stock itself is up almost 2% at the back of those results.
All right, so the JSE actually looking strong today. Thank you very much, Makwe Masilela from Makwe Fund Managers.